to set the tone for a day that is going to be centered on disciplined capital and structural competitiveness. Please welcome on stage Mr. Y. Rama Rao, who is the Senior Managing Director and CEO of Spark Capital. Good morning, Mr. Rao. The stage is yours.
Good morning. On behalf of Spark Capital, let me first thank the Times Group for giving us the opportunity to participate, to kind of co-own this event in some form, and give us the opportunity to present our perspectives on this stage today. I was asked to speak about, the topic I was given to speak about is patient capital. Capital which is patient, long-term, and in some form vital and necessary for us to build a Viksit Bharat 2047. A few weeks back, I'm sure all of you have read the same news item. A news item caught my attention. It was about the Norwegian sovereign wealth fund becoming over $2 trillion in assets under management. Two things in that news item in the Economic Times which kind of are relevant for the topic of discussion today. They built this over 3 decades of disciplined investing. More important, their compounded annual return rate is 6.1%. It's not the fancy 20, 25, 30% that we hear from venture capital and private equity. It's not the fancy 100% Das Kabis Indian mentality, right? It is about 6.1% grown over 30 years. It becomes more than $2 trillion. So patient capital of that variety gives us both an ability to access capital which is available for long periods of time. It also comes with a reasonable rate of return expectation, something which is very important for us to build vital infrastructure, both digital and physical, in this country. This is not the first time. The theme of this year's Global Business Summit is a decade of disruption and a century of change. We are not the first country which is going about doing this. If you look at 1960, South Korea did this. They took universal education for all of their citizens of a uniform standard and variety as their decade of disruption in the 1960s. The result, they created their century of change. $158 of per capita in 1960 is over $36,000 of per capita today. Singapore did this in the 1970s, and later today we'll be hearing about the Changi Airport and its story and creating the next $1 trillion opportunity. Singapore did this in the 1970s. They went about investing in infrastructure, primarily ports, and some investment into a world-class airport. The result, $900 of per capita in 1970 is $90,000 today. They created their decade of disruption through physical infrastructure, and it brought about a century of change for the population to become a developed nation today. Japan did this in the post-World War II phase. They created a goal to have universal health care for all their citizens. And it's not always about money, right? They created access to health care for all of their citizens as their motto in that decade. They created a century of change. Today, Japan has among the world's longest living population. Our time is now. We can create the next decade of disruption, and it will in all confidence, we can say this, create our century of change. The Viksit Bharat 2047 being a significant milestone in that process of century of change. But to create this process of century of change, and I think we have heard our Honorable Prime Minister speak last evening very eloquently, and I suppose he touched a lot of our hearts significantly. There were shouts of Modi, Modi, which you could hear and reverberate in this room of so-called somewhat cynical and learned colleagues of mine here. So I think he touched a chord as far as the vision for 2047 Viksit Bharat is concerned. And he did articulate a few things that we need to do to get there. Apart from the fact that we have to believe in ourselves, belief, he emphasized on it, and the fact that there should be a disciplined process of doing things, he spoke about 3 significant pillars in my view, all of which require patient capital. Significant annual recurring investments into infrastructure, both digital and physical. He spoke about upgrading our manufacturing capabilities to global scale and global quality levels so that we benefit from the trade deals which have been signed with 38 countries now, and more are going to be signed in the future. The only way we can benefit is by being able to compete with those companies in those countries and in other nations by significantly upgrading our manufacturing capabilities. He spoke about that. He spoke about the need to pull people continuously out of poverty. He spoke about the neo-middle class and our need to sustain supporting them for some period of time. All of these three pillars will require patient capital and loads of patient capital. We have 21 years to get to 2047. It is 3 cycles of infrastructure investments that we can make in these 21 years. It's long enough for that. It's long enough for us to transform our education and energy systems. It's long enough for us to actually dream and make a reality of a fab to finished product semiconductor ecosystem in this country. But unfortunately, it's just not long enough. It's also short enough for us to fall for and find excuses not to make it. Patient capital and availability of patient capital and access to patient capital should not be an excuse for delay. It should actually be the call for urgency with discipline. We are here to understand where does this capital come from. And over the course of the day today, several sessions have been arranged. Some will speak about access to such capital. Some will speak about where to invest such capital. Some will speak about how to go about creating an ecosystem to encourage such capital coming in the first place. But where will this capital come from? And if you actually go down looking at the data points, and for those of you who have been fortunate to work during the first phase of reforms in India in the 1990s, you will understand that we were roughly $300 billion of GDP that decade, give or take, $60 billion of annual savings, hardly enough for a nation of our size then, despite the cost adjustments that are there between now and then, for us to be able to use any of our domestic savings to invest into critical infrastructure required for us to grow the next 30, 50, 100 years. We did not just have it. We were heavily dependent on foreign capital flows, both for portfolio as well as direct. We were short of trust for the long-term capital from outside to flow in so easily. And I struggled in my starting phase of the career trying to sell infrastructure assets in this country to patient capital sources outside this country, whether it is the infrastructure funds outside of India, the sovereign wealth funds outside of India. We hardly found a buyer those days. Fortunately for us, it is not the case today. We not only have and the need for, and we will continue to get good sources of long-term stable overseas capital from either the sovereign wealth funds or from the infrastructure variety. We have significant domestic capital to harness. And if we channel it properly into creating the right investments to disrupt our next decade, as this theme suggests here today, we will go about creating a Viksit Bharat 2047. We will also go about creating a century of change for ourselves. We have $300 to $400 billion of annual savings from the households in this country. We have over $1.2 trillion of assets in EPFO, insurance, and mutual fund AUMs in this country today. To begin with, we have $1.6 trillion of domestic household savings in one form or the other available for us to start making this disruption today. What does it require is the next question. But we have enough sources of capital, even domestically, even while attracting the right kind of foreign capital that we need in the first place. The sessions today, I think, will also speak about not only having the capital, but also kind of building redundancies in some form, building supply chains which are dual in nature, building buffers for situations which will come in the future. Given the geopolitical formations today, given the experience of the pandemic of 2020, we are likely to have another crisis, if not now, sometime in the near future. We have to prepare and invest some of this patient capital into what we are calling anti-fragility infrastructure to be creating for ourselves. A panel of speakers with Arvinder Singh Sani from the CMD of Indian Oil, Mr. Manish Tiwari, CMD of Nestle, and Mr. Vinay Dubey, the CEO of Akasa Air. They will delve deeper into the topic about creating and moving away from excessive focus on efficiency into creating what we call anti-fragility. For too long, and this is my favorite topic anywhere I go, but for too long, we are an ROE and ROI obsessed nation. We look for the highest ROE next quarter. We are valued on the basis of the highest ROE that we generate next quarter. In the process, while it is important to generate ROE and important to generate profits, and I am not the supporter of long-term loss-making, scale-building business per se, while it's important to focus on ROE and it's a healthy factor to consider, it's important that there are certain times in nation building, one has to move just from an excessive focus on ROE to actually building capital, building assets, infrastructure, and buffer zones for ourselves to deal with moments of crisis. When we do such investments, that moment, it looks like inefficient use of capital. But believe me, when a crisis hits us, and it will hit us at some point in time in the future, that will be the difference between survival and bankruptcy, as have several nations seen during the 2020 pandemic. Patient capital understands that need. Patient capital deals with that inefficiency as a necessity, unlike impatient capital, which will run away at the first instance of inefficiency being perceived, not even seen in the first place. In our goal for a Viksit Bharat 2047, the first and the most important milestone, another topic of discussion today, is our goal to achieve a $10 trillion economy by 2035, a decade of disruption to create $10 trillion economy. We have heard some speakers, including the Honorable Chief Minister of Maharashtra, speak about their individual state aspirations and ambitions. The sum total of it will be more than $10 trillion if you count and call all the chief ministers today and count the number. That's the good part. But we have the ambition and the belief that we will go to $10 trillion by 2035. But for us to really go there, we need to focus on creating a lot more gross fixed assets in this country. It is estimated, and these are estimates, they could vary, anywhere between $300 to $400 billion of incremental annual investments are required for us to put in the form of gross fixed capital formation if we have to go to achieve the goal of $10 trillion. Not an easy one, but patient capital is the answer. It has the resources, and we can get there with that capital coming into us in the first place. But what does patient capital need? We are talking about these countries. It needs a few things. It needs trust in governance, right? Something which we have been lacking for a long time in this country. Much better now, but there's still lots of progress to be made on that count. It needs stable and predictable regulatory regime. It cannot have retrospective taxes, retrospective changes in regulatory, and we have seen how much we suffer when we go into that mode of thinking. We need stable and regulatory regime, stable and predictable regulatory regime. I was encouraged by the conversation of our SEBI chairman yesterday, where he spoke about optimal regulation and not excessive regulation. I think it's a step in the right direction, and we should take heart from the fact that we have regulators out there, policymakers out there, governing people out there who are thinking the right way to bring in that framework of trust, the framework of regulatory, of practical, pragmatic regulatory regime, and most important, the framework that a contract in this country has to be enforceable. A lot of patient capital suffers in lots of countries in the world, and one of the reasons why India is often chosen as the preferred destination for such capital, should we meet the promise that we have at this point in time, is the fact that we have an English legal system, and we are by and large an enforceable contract country. We need to kind of build further on it. We have made a lot of progress in the last decade, but we need to build further on that if we have to get to the vision of attracting a large amount of this patient capital necessary for us to get to 2047 and beyond. I will conclude my talk. I don't know how much time I took, but I'll conclude my talk by saying that it's obvious that we need capital, right? There are two kinds of capital which are available out in this world, pretty much like anything in the page 3 variety today, right? There is glamorous capital. There is capital which is spectacular. There is capital which is short-term in nature, which kind of chases momentum. There is capital which grabs headlines. Will that capital take us anywhere as far as building this Viksit Bharat and the century of change today? No. The answer is no. We need boring, disciplined, stable, long-term compounding seeking source of capital for us to get to that stage. And it is out there available to us today. It is out there available to us. It is out there for us to kind of grab. We have the opportunity. We have the markets. We have the ecosystem today. We have an encouraging regulatory and governing framework that's also backing us today. So once we have this access to patient capital, each one of us in this room, we may be an entrepreneur, we may be an investor, a policymaker, we may be just a kind of an influencer of some sort in this economy today. We have to ask ourselves a few questions. Are we building for the next quarter or the next few quarters? Are we building for the next few decades? Right? It's something which I always tell in my own company. We should, one factor which kills institutional building is a constraint of time, right? We have to give it time. So are we building for next few quarters? Are we building for next few decades? Are we optimizing for efficiency or are we building for anti-fragility? Are we chasing momentum? Are we chasing long-term compounding? Or are we seeking long-term compounding? Are we planting trees or are we harvesting fruits today? We need to ask these questions to ourselves because they become an important part of how we go about disrupting the next decade and eventually going to kind of create our century of change, which is long overdue to us and right in front of us, available to us. I'll kind of talk about one, for the sake of being an Indian, I will talk about a Sanskrit verse, which I borrowed from the Arthashastra, but I think it's kind of predates that. It goes on, say this, Alpam api uparjitam, short-term gains of spectacular nature. Bahu bhavati, chirakala sanchayat. They get trumped any day by long-term patient accumulation of gains. This was said in the Arthashastra. It is predating Arthashastra as far as the verse is concerned. It is in our culture, it is in our system, it is in our DNA, it is in our ethos to seek long-term benefits for ourselves. Let us script a tomorrow built on such patient capital. Let us build both a Viksit Bharat 2047 and let us build for a century of change by disrupting the next decade. Thank you.